Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Thursday, February 19th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today, the S&P 500 was up 39 basis points, and we closed at 3581.85. The first chart that we're going to look at is a 2-day, 2-minute candlestick chart of the S&P 500. So each candlestick does represent 2 minutes of trading. Over here, of course, is yesterday's trading, and we know that we finished at the lows of the session yesterday. Today, we gapped down at the open and made the lows of today's trading just after the market opened. The dotted blue line, by the way, is where we finished yesterday's trading. So anything below that is negative, anything above that is positive. And you can see here that for the majority of today, we were trading below this dotted blue line. So we were in negative territory for the bulk of the day. We went positive at about 1:45 in the afternoon, and then just had a slow melt up. And of course, we finished up 39 basis points and again closed at 3581.85. The next chart that we're going to look at is a 1-month, 30-minute candlestick chart of the S&P 500. And of course, I have quite a few annotations here that I want to share with you. Let's start with this uptrend line that started on the first trading day of November, as we can see here, after the market bottomed on October 30th. So we had this really nice uptrend intact, but we have broken that uptrend and really have been trading sideways for almost 2 weeks now. The highest point ever on the S&P 500 was right at the opening of trading on Monday, November 9th, and this was on the back of the very good news that Pfizer had about their efficacy of the coronavirus vaccine that they've been testing, and we hit the highest point ever right here on the S&P 500. And you can see that we've been making lower highs since. Even this last Monday on the 16th, when Moderna came out with their news, which I thought was as good or better than the Pfizer news, we still never got back up to these highs. Okay, so we've been making lower highs in the S&P 500 for almost 2 weeks now. And this horizontal blue line is the 3600 area on the S&P 500. So on the 16th and 17th, we were able to close above 3600. However, yesterday, right, when we sold off from about noon, right, where you can see where we sold off and then closed at the lows of the session, that is this movement right here, that took us back down below this 3600 area. All right. Now, today, obviously, we had a slightly positive day and got back some of what we lost yesterday, but we are still closing now below 3600. So the question becomes, over the next few days, can we climb back above 3600 and start to close consistently above 3600 on the S&P 500, or will we roll back over the next few days and fall down to this 3525 area, which is a very, very minor support area that is right below where we're currently trading? And you can see that this area of support really starts on November 5th, where we traded right up to the 3525 area, and then 3525 on these half-hour candles was acting as an area of support during this last couple of weeks. So there's just not a lot of support here. However, if we roll over, it is possible, just like it happened here and here, that 3525 will hold and we'll just, bounce off this area like we did here and here. However, with the loss of momentum that we seem to have had over the last couple of weeks, I think it's quite plausible that we will break beneath this 3525 area and head lower. So the next couple of days, I think, will be quite critical in the stock market, at least to show us which direction the market wants to go in the short term. But right now, we're at least consolidating here, okay? And I'm going to make one more annotation just so you guys can see this. There's definitely a case to be made for the market consolidating, it's kind of in a wedge shape, right? If we connect a few of these candles like right here, So here we can see with this trend line that I just drew that there is a case to be made for the market forming a wedge here and consolidating. Again, another way to look at this is which way are we going to break out of this wedge? Are we going to break out to the upside and go back to closing at new all-time highs above 3,600, or do we break down and trade beneath this wedge and then break beneath 35.25? So I think the trading in the market over the next couple of days could be quite telling as to which direction the market is heading, at least in the short term. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com.